Good day to our lecturer and fellow students. Our presentation focuses on the fundamental shift in Malaysia's monetary environment. We are witnessing a transition where physical fiat money is being systematically replaced by electronic money or e-money as the primary medium of exchange. This evolution was significantly expedited between 2021 and 2025, driven by radical post-pandemic consumer behaviors and the strategic requirements of Bank Negara Malaysia's Financial Sector Blueprint 2022 and 2026. Applying monetary theory to this shift, a cashless economy enhances efficiency by lowering the shoe leather cost, the time and effort spent by individuals and businesses in managing physical currency. Furthermore, it increases the overall transparency of the money supply. However, as we move toward a high-value knowledge-driven economy, it is vital that we develop a digitally literate and competent workforce to manage the security and technical complexities of this contemporary financial apparatus. While the route to digital application is fast, it remains a thorny process due to structural challenges. We must address the digital divide among the older population and the connectivity gaps between regions to ensure financial inclusions for the unbanked and underbanked. Therefore, our strategy must be multi-layered, focusing on building public confidence and ensuring that our digital payment rails are resilient enough to facilitate the long-term economic performance.
For my part, I'll be presenting on the concept of cashless society. A cashless society is an economic system where financial transactions are carried out mainly through electronic and digital payment methods rather than physical cash. Payments are made using debit and credit cards, online banking services, mobile payment applications, electronic wallets, and QR code payments. Although cash is not completely eliminated, its usage is significantly reduced as digital payment methods are faster, more convenient, and more efficient. The concept of a cashless society is closely related to the development of technology and the historical evolution of payment systems. With the widespread use of the internet, smartphones, and secure digital payment platforms, societies have gradually shifted from physical money toward digital forms of payment. Next, we have evolution of payment system. The cashless society has emerged as a result of the long historical evolution of payment systems that parallels economic development and technological progress. Over time, societies have moved from simple exchange methods to more advanced payment systems in response to the growing demand for speed, convenience, and security in financial transactions. In early societies, transactions were conducted through the barter system, where goods and services were exchanged directly. While effective in small communities, the barter system was inefficient due to the lack of common measure of value and the need for a double coincidence of ones. So, to overcome these limitations, physical money in the form of coins and paper currency was introduced. Cash became a widely accepted medium of exchange, store of value, and unit of account, supporting economic growth for many centuries. Later, development of banking institutions led to the introduction of non-cash instruments, such as checks, bank drafts, and electronic fund transfers. This reduced the reliance on physical cash, especially for large amount of transactions. In recent decades, rapid advancement in information and communication technology have accelerated the shift toward digital and electronic payments. The widespread use of debit and credit cards, online banking, mobile banking, and e-wallets has transformed how individuals and businesses conduct transactions, forming the foundation of the modern cashless society. Lastly, I would like to share with you the types of cashless payment methods. So, there are various types of cashless payment methods used in cashless society. These include traditional electronic banking tools as well as modern digital payment platforms. Understanding these methods help explain how cashless systems improve convenience, efficiency, and security in daily transactions. Firstly, we have debit and credit cards. Debit and credit cards allow users to make electronic payments directly from their bank accounts or credit facilities without using physical cash. Next, we have online banking. Online banking enables users to transfer funds, pay bills, and even manage their accounts through digital platforms without having to visit any bank branch. Next, we have elec- Next, we have electronic wallets or e-wallets. Some of the examples of electronic wallet payments are such as Touch and Go e-wallet, GrabPay, Boost, and ShopeePay. These applications allow users to make quick and contactless payments by only using their smartphone. And lastly, we have the QR code payments. These QR code payments enable users to make instant transactions by just scanning a code. This offers a simple and low-cost payment solution that is widely used by the younger generations now.
Next, I will explain the main factor that drive Malaysia toward a cashless society. These include technological advancement, government initiative, consumer behavior, and led a role of financial institutions and fintech companies. Firstly, technological advancement is a major driver of cashless society. In Malaysia, smartphone ownership is very high, with more than 90% of the population owning smartphone. This allows the widespread use of e-wallets such as Touch and Go, GrabPay, and Boost, where users can make payment instantly using QR code or mobile apps. In addition, NFC technology enables tap and pay transactions using card or smartphone, while Do It Now QR provides a low-cost solution that is suitable even a small street vendor. Technologies like 5G, artificial intelligence, and blockchain further enhance payment speed and security. As a result, digital payments in Malaysia are faster, safer, and more efficient, encouraging people to move away from cash. Secondly, government initiatives play an important role in promoting a cashless society. Bank Negara Malaysia actively support cashless payment through the financial sector blueprint, which encourage online banking and QR payment. The introduction of Do It Now QR as a national standard has made cashless payment easier and more accessible across different platforms. Furthermore, the government introduced incentive programs such as e-Tunai Rakyat, e-Belia, and e-Pemula, where free e-wallet credit were given to Malaysians. These programs successfully increased awareness and confidence, especially among young people. At the same time, strong regulation and cybersecurity measures help protect consumers and build trust in digital payment system. Next, consumer behavior strongly influences the shift toward a cashless society. Many Malaysians prefer cashless payment because they are faster and more convenient than using physical cash. According to a Visa Consumer Payment Attitude Study, 55% of respondents said they could survive without cash for more than a week, while 74% had used cashless payment in the past year. Physiological and social factors such as perceived usefulness, ease of use, security, and seeing others use cashless payment also encourage adoption. This shows that Malaysians are becoming more comfortable with digital payment even though cash is still used in some situations. Lastly, financial institutions and fintech companies play a crucial role in developing a cashless society. Banks in Malaysia have improved online banking service, debit and credit card usage, and instant fund transfer. At the same time, fintech companies offer innovative payment solutions such as e-wallet, QR code payment, and contactless transaction. These methods are widely accepted and especially beneficial for small and medium-sized enterprises. collaboration between bank and fintech companies has strengthened the digital payment ecosystem, making cashless transactions more reliable and accessible.
Advantages towards cashless society. First is convenience. In countries like Sweden, cash usage has dropped below 10%. Why? Because digital payments are frictionless. For consumers, it's about the invincible transaction, whether it's a wearable device, a smartphone, or a biometric scan. The tap and go culture saves the average person hours of time over a year. For the business perspective, the hidden level of cash is immense. When a business goes digital, they eliminate the reconciliation ritual, the hours spent at the end of a shift counting drawers, and the physical risk of making night deposits at the bank. It creates 24/7 ecosystem where commerce happens at the speed of thought, not the speed of paper. Second, let's talk money. Managing physical cash is expensive. The infrastructure of paper. Think about the carbon footprint and the literal cost of printing bills, minting coins, and operating fleets of armored trucks. In US alone, these logistical burdens exceed 200 billion annually. Reinvestment by removing the need for physical security and transport, businesses can pivot. That money previously spent on maintenance can be redirected towards innovation, employee benefits, or lowering prices for the end consumer. We are essentially upgrading the operating system of the economy. The third one is financial inclusion. This isn't just about making life easier for the wealthy, it's about democratizing access for the underserved. In many developing regions, the nearest physical bank branch might be a day journey away. Mobile empowerment services like M-Pesa in Kenya have proven that you don't need a brick and a mortar building to have financial agency. A simple mobile phone becomes a portal to the global economy. The power of a footprint for the unbanked cash is a dead end. It doesn't leave a record. Digital transactions create a financial CV. These digital footprints allow a street vendor or a small scale farmer to prove their income, build a credit score for the first time, and finally qualify for loans they needed to escape the cycle of poverty. Finally, a cashless society is a safer one. Digital transactions leave a searchable audit trail, making money laundering and tax evasion significantly harder. In India, direct digital transfer have stopped billions from being lost to corrupt middlemen. No cash on hand also means fewer retail robberies. Challenges and disadvantages. First, let's talk about cybersecurity threats and online fraud. So, cashless means your entire wealth is a target. Since 2022, online fraud has jumped 40%, led by sophisticated scams like Autoros push payment fraud. Unlike losing $20 bill, a digital breach can wipe out a life saving in seconds. Furthermore, we are trading anonymity for convenience. Digital payments leave a permanent footprint when 79% of the users fear how their data is used. We have to ask, who owns your spending habits? Is it you, your bank, or a corporation targeting your next purchase? Secondly, privacy and data protection issues. While convenient, a cashless society effectively ends financial anonymity. Unlike cash, which is a private exchange between two people, every digital payment invites a third party, like a bank or a tech giant, into a room. These companies don't just move your money, they harvest your data. They know where you are, what you buy, and how you. This isn't just about annoying ads, it's about a loss of freedom. According to Pew Research, nearly 79% of us are worried about this. And for good reason. In a world without cash, your unhealthy or unfavorable purchases could one day impact your insurance rates or even your social standing. When we lose the ability to pay privately, we lose the ability to live privately. The third one is digital divide. While the world rushes towards digital payments, we are leaving the most vulnerable behind. A cashless society creates a dangerous digital divide. Take our older population. Reports from UKH concerned in 2024 show that millions still rely on physical cash to manage their life and engage with their communities. For them, a smartphone app isn't a convenience, it's a barrier. This isn't just about the age, it's about geography. In rural areas with poor cellular reception, a cashless store is effectively a closed store. We saw the real world consequences of this during the pandemic. When businesses stopped accepting cash, people without digital cards or stable internet weren't just inconvenienced, they were unable to buy food and medicine. By removing cash, we aren't just updating our tech, we are risking a form of financial marginalization that shuts the door on millions of our fellow citizens. Lastly is over-dependence on technology. Efficiency is great, but it shouldn't come at the cost of survival. When an economy becomes 100% digital, it creates a single point of failure. Think about it. A simple power outage, a software bug, or a coordinated cyber attack doesn't just slow down business, it halts the entire country. We saw this in 2022 during the Rogers Network outage in Canada. For hours, millions of people were effectively paralyzed. They couldn't buy groceries, pay for transit, or access their own wealth because the grid was down. On individual level, it's even riskier. If you lose your phone or an algorithm incorrectly flags your account, you are instantly locked out of the economy. You have no way to move, eat, or survive. Digital systems are fast, but they are brittle. Cash is the only offline backup we have. It is physically robust and functions even when the lights go out.
Next, we're moving to the current landscape. Digital payments are no longer an emergency measure but a daily routine. According to the Bank Negara Malaysia Annual Report 2024, e-payment transactions reached a record of 14.7 billion. Notably, the average transactions per capita reached 409, which is nearly doubling since 2019. Data from Opachus indicates that e-wallet usage hit 94% in late 2024, with physical cash usage dropping to just 36% of retail transactions. Malaysia's e-wallet environment has reached a state of consolidated maturity. Touch and Go remains the market leader due to its deep integration into our national toll and transit networks. We are also seeing the rise of challenger banks. For example, GX Banks captured over 1 million customers by mid of 2025. These platforms are evolving into lifestyle hubs through embedded finance, such as Maybank's MAE app, which has already generated 8 million tabung goals for users. Lastly, the government's whole of nation strategy, particularly the My Digital initiative, aims for a 90% cashless transaction rate by 2025. Besides, grassroots programs like Eduit Desa have also successfully onboarded over 800 rural micro merchants to the digital grid. Globally, Malaysia is a fast mover, ranking second in QR code adoption at 66.1%, closely following China. However, e-wallets in Malaysia are currently used primarily for microtransactions, averaging around 245 ringgit per month. The next step is going to be leveraging electronic Know Your Customer, or also known as EKYC verification, to build the trust needed for larger asset purchases.
In conclusion, the movement toward a cashless society represents a significant change in how financial transactions are carried out in Malaysia. This shift is driven by several key factors, including technological advancement, supportive government initiative, changing consumer behavior, and strong collaboration between bank and fintech companies. As a result, the use of e-wallet, online banking, QR code payment, and contactless transaction has increased significantly, showing that Malaysia is becoming less dependent on cash. However, moving toward a fully cashless society also comes with challenge. Issues such as online fraud, data security risk, limited digital access among certain communities, and heavy dependence on technology must be carefully addressed. Therefore, to ensure economic stability and inclusivity, continuous improvement in digital infrastructure, stringent security standards, and public education are essential with this effort. Malaysia can achieve a balanced and suitable cashless society. Thank you.